Today is Tuesday, February 20th, and this is the ADM Investor Services Weekly Market Kickoff. Today's guests are Alan Bush, Senior Financial Economist here at ADMIS, and Steve Freed, Vice President of Grain Research. Alan, last week the 30-year Treasury bond futures traded at the lowest level since April 2015. What is the outlook for the 30-year Treasury bond futures now?
Well, it still appears to be lower. The Fed is on track to raise interest rates at least 3 times this year. Also, we have a lot of supply from the Treasury. This week, the Treasury will offer $258 billion in securities, so that puts some downside pressure on futures and takes rates higher. So nothing has changed. My outlook on the bonds still is bearish, and the double bottom that we have in the March bonds, I think, will be taken out within the next week or two.
And stock index futures are lower today in response to rising U.S. Treasury yields. Are interest rates high enough to reverse this bull market?
No, I do not think that they are high enough. In fact, we have to look at interest rates globally. And in fact, some parts of Europe still have interest rates that are negative. So rates are firming, but not yet to a point that would reverse this bull market in the indices.
The U.S. dollar fell to a 3-year low last week. However, the greenback is higher today due to U.S. rising interest rates. How is the U.S. dollar bottomed?
Well, the dollar index has not bottomed, and it appears that while the Fed is on track to hike rates, that would normally be bullish for the dollar index. But we have to compare the Fed policy to interest rate policies elsewhere in the world, and it does appear that other central banks are raising rates at a faster rate than the Fed is likely to raise, or are withdrawing accommodation. So with that in mind, interest rate differentials remain bearish to the dollar index, and I would expect further pressure in the greenback over the next several months.
Steve, soybean and soy meal continue to trade new highs. Why?
It's all weather. Argentina over the last 3 months has seen rain over about 50% of the area. Argentina is the #1 exporter of meal in the world, and the perception by the market is that we're gaining potential crush capacity and also meal exports. Crush margins making new highs at $1.50, and so we don't really see a top yet in soybean meal futures, soybean meal spreads, soybean meal basis, or crush margins because of Argentina weather.
And corn and wheat futures are following these new highs, but at a slower rate. Why?
There's just too much supply of corn and wheat from last year. They don't have a weather problem yet. As we get higher, nearby market at $3.70 corn, we're buying corn from the U.S. farmer. He's got a record amount to sell from last year's supply. And we still have too much global wheat supply, and so we're still a good 30, maybe 60 days away from corn and wheat markets trading weather. And so it's following, but at a slower pace. And for corn and wheat, it's mostly a short covering rally. Especially in corn, the funds have covered their entire short position that they've had earlier in the year.
And what will the USDA say this week at the annual Outlook conference?
It's more of a 10-year projection. So things usually aren't that explosive that comes out of the USDA. Some people think they might change U.S. acres for 2018. Right now they're talking about 91 million acres of corn and beans, and most people think those corn acres will be lower than that, and bean acres might be higher than that. USDA kind of dropped the ball in February when they didn't change their soybean supply and demand data to reflect the Argentina weather. I doubt if they make any changes on this, but we'll be watching to see if they have any verbiage that suggests in March when they do the S&Ds, they might make some changes then.
Great. Please remember that the opinions expressed here today are solely the opinions of our guests and are not necessarily the opinions of ADM Investor Services or Archer Daniels Midland Company. If you have any questions or comments or would like to know more about our services, please contact us at www.admis.com.